And I think the shock phase could be over. We all understand the situation that we're in. Unfortunately, I don't think the disappointing phase has even really gotten underway yet. I've been thinking all week about C&I loans, credit card loans, commercial mortgage-backed securities, all of the things that are probably going to blow up. And I don't know that financial companies have taken enough loan loss reserves and are really ready for these charges just yet. I think they'll be okay. Fortunately, the financial sector is in a much better place than it is during the last recession. But like when we look at one day's action like today, yeah, I understand the Dow's up 300-something points. We're on the lows of the day for all of the major averages. And I don't understand this concept of looking at something that's up a lot today and being like, that's leadership. The financials are trading at the same level that they were trading in June of 2007. Just look at a 20-year chart of the XLF. There is no leadership there, and there shouldn't be. These stocks have been harder hit than the overall market, which makes perfect sense. But if you tell me we're going to have millions of delinquent loans everywhere from autos to housing to commercial building, and we're going to get away with being down 16% in the Dow and the S&P, I just can't see it. So I take no pleasure in relaying this to the viewers or to you. I'm not short the market. I'm not here to foment panic. I'm an investor. I'm long. I'm just telling you I'm very skeptical that we've seen the worst of what's coming. And I really feel it's important to look at these massive rallies and say to yourself, if there's something that you want to take off the table, do it. So I sold Disney this week. I sold Nike last week. Took something else off today, which we'll talk about later. And I'm not getting, excited about these one-day bursts for the Russell 2000, which is absolutely hammered in the grand scheme of things.
So to that point then, Pete, if you mentioned the bank stocks, which are trading better today. I mean, great. They've been horrible. If you're hanging your hat on that, to Josh's point, I don't know if everybody else is getting that ringing in the ear, but I am, and it's annoying.
Yes.
Our apologies for that. If you're hanging your hat on the financials, it's a straw hat at best, and it can get blown off real quick.
Yeah, I don't think I ever said anything about hanging my hat. What I said was,
no, those are my words. Those are my words, clearly, not yours. But you pointed out how the financials were trading better today as a positive sign for maybe how we should view the market. I asked you guys how you should view the market today heading into the weekend. You mentioned the financial trade as one of those things to note. Josh's point is, look, these things have sucked, and they're likely going to be troubled going forward, and potentially even more so than they are now. I think that's the debate that we're trying to initiate here.
Sure. Well, I think Josh would agree with this, though. When you look at J.P. Morgan and you're looking at a stock that was trading over 100 on Tuesday when they reported, and then it got all the way underneath 90, Scott, and the fact that it has a nice move to the upside today, I believe when I was on Monday, Josh was saying that he was interested in buying J.P. Morgan. He said he might add to it. So I understand his point in terms of, do I believe that the financials are going to save the day? I really don't think so. But it is a change of tone that we see occasionally here in the markets, where it reverses a little bit, or it switches from what the leadership is day to day. And that's been the market strategy. Literally, that's what's been going on probably for the last 18 months or more.
Yeah, but the leadership lately, though, Pete, hasn't been day to day. It's been the leadership has been technology and high growth. And the laggards for more than day to day have been the financials. I mean, let's just
energy.
Let's just cut to the chase. I mean, would you tell people to buy any bank stocks today? And if so, which ones?
No, I probably wouldn't say today would be the day, because you don't want to buy the bank stocks when they've actually already made some moves. Now, I don't think this is a move that is significant, to Josh's point. When you look at where they are to this level now from where they were years ago, yeah, I mean, that makes a lot of sense that you'd want to look at it that way. But I think you have to look at, is the market showing you anything different than it was? And what we've been watching is a market that's had a very narrow leadership, all in technology, all in the fundamental balance sheets of about 5 or 6 or 8 big names. And that's really what's been controlling the markets. And at some point in time, we're going to have to move off of some of those names, because how long do you expect to watch Netflix and Tesla and Amazon move the entire markets, and then maybe sprinkle in a little bit of Apple and Microsoft. It's great to see these names performing the way they are, and I understand why. As a matter of fact, I'm in many of those names, but I'll give you an example. Netflix, because of the move that it's already made, that's a name that I'll be out of before the end of the day. Now, it's already moving to the downside from where it was yesterday, but I've still had a pretty decent gain in there. I want to take some of that off, and I'll probably be out by the end of the day just because we've had so much of a move there. But we're looking for other areas of the marketplace to show us that there's some fundamentals about what this market maybe could show. Now, I'm not saying that one day, like to your point, one day in the financials, it's meaningless. You're totally right. But at least we're seeing something out of the financials because we watched them go.
Well, I mean, it's better than going all the way down towards
the KRE. It's absolutely been collapsing.
It's better than going down towards the flat line.